Hello and welcome back to Building Wealth on the Go, a podcast by KLT Wealth Management. My name is Brad Wilson, financial advisor with KLT Wealth Management, and I'm joined by my colleagues, certified financial planner Joe Filiomeni and qualified associate financial planner Courtney Beach. Today, we are actually doing a video Zoom call with this podcast today. So we're going to be putting the video portions out onto YouTube. So if that's a platform that you use and like to listen or watch your podcasts on, you can go see the video version there if you are listening to it on any of the other platforms now. So moving forward, we're going to give this a try and see how it works out. But we are back with episode 14 of our podcast. We've taken a few-week break and are here. There's lots to talk about when it comes to the economic conditions, and specifically within Canada. There's lots of news swirling around, so there's lots to talk about. So today is July 16th, 2020. And I think the big thing that we're going to just dive right into today is talking about, we had Morneau come out, the finance minister for Canada, last week, giving a budget update and giving insight into what the deficit is going to look like for Canada. So he came out and threw the big number of $343 billion out. So Joe, do you want to talk a bit about what that kind of means and what the state of the Canadian economy is?
Yeah, sure. Well, I guess the big question is, were we surprised? Were we surprised? We knew that there was going to be a deficit. Were we thinking it was higher, maybe lower? It seems like the market has taken that all in stride, with the announcement. So I don't think it was a really big surprise that, we went into debt during this crisis. So I wanted to kind of look at and have some discussion in the broader aspect of sort of Canada and how this sort of impacts Canada. First and foremost, let's play devil's advocate a little bit, because a lot of people say, the government shouldn't have this amount of debt. They shouldn't be, basically this is impacting our future, our kids' future, our grandkids' future. So let's sort of back up a little bit. If at the time that the virus hit, if there was no governmental support, there was no wage subsidies, there was no rent subsidies, there was no programs to help people, what would the situation would have looked like?
A lot of people would have been in dire straits, that's for sure.
Oh, for sure. Because let's figure, a lot of people, us included, in March, when we were told about the virus and everybody suggested on shutting down, everybody says, okay, well, we'll shut down. We're gonna close out. It's a bit of a holiday, right? Just let's take a little bit of a break. And everybody was willing to do so. If there was no government support for a lot of those businesses out there, how many would have actually shut down? In which case, then that would have increased the cases of the virus and the virus spreading. So I think we would have had a lot of issues, especially here in Canada. So we needed this support ultimately, I feel, in order to help us get into a better position, which we are in, albeit that we're in debt. I think some of the facts and figures, I think the economy contracted something like 4 to 6%, during this period of time. Analysts looking at the situation without any government support, we would have probably contracted somewhere in around 11, 12%. So there was some benefit. There was obviously a lot of benefit, I feel, with the government coming forward with the debt. So I'm happy that the way that the government sort of stepped in, both levels of government, ultimately the federal and the provincial government. So what do you think sort of, I think what ended up happening is the money that the government poured in kind of formed the floor that was sort of helping the economy from like total collapse. And that's what it was needed. So now we're in the situation, we have this debt. What's our next step?
Yeah. Well, I think just to backpedal a little bit, I think part of the criticism, I think a lot of analysts were thinking, yeah, we're spending a lot of money, but it wasn't going to be that much, and the spending isn't over, right? They've just expended the wage subsidy till pretty much almost the end of the year for small businesses, and I think the comparison comes, okay, looking at what other countries around the world are doing. And sure, spending all the money definitely was a big help, but where are we going to pay for it, and how are we going to pay for it? Is it going to be lots of higher taxes in the future? Is it going to be cuts to programs? What is it going to be? That's the big unknown. And then the other is comparing it maybe to some other countries out there. Did they take a better approach? Maybe could they have handled it better in terms of where the money was allocated? But I do agree that the government doing what they did is the reason why we are where we are today, and the rebound that we've had. And I think the success that we have had relative to some of the other countries in terms of the economic rebound. But I think the question was it too much? Was it properly allocated? And I think those are some of the questions that the government's being asked right now by a lot of opposition and others in the industry.
Yeah, well, I mean, let's face it, this is a huge event that happened. I mean, this is hopefully a once in a lifetime sort of event, once in a generation event. We haven't seen spending like this since the Second World War. And this budget, this deficit that has come out is just a projection at this point. Like, they factored in things, they factored in spending that they haven't committed to spending yet. For instance, extending some of the benefits that you're talking about, Brad. They've extended some, but they haven't extended all of them. So it'll be interesting to see if they actually spend or need to spend the money that they have spent.
Yeah. And then also the credit rating for Canada dropped when it comes to, so just how Canada is being perceived on a global scale when it comes to the strength in the economy, how good they are on their debt, and everything like that. So that's something to watch as well, right? When it comes to that rating dropping, that was big news as well.
Yeah, that you know, that sort of leads into sort of the topic of Canada in general as an economic power, and we've talked about it in the past, is how Canada is limited in its resources. And I know when we build our portfolios and build our investment portfolios, we are mostly global. We don't have like a Canadian bias, because at the end of the day, what do we have in Canada? Like, we have
resources and finance.
Yeah, we have a small tech sector. We gotta recognize that we do have a small tech sector, and I know in previous years the government has been trying to push to build that tech sector, which I applaud them for that. I think that that's the avenue to go to, because of course that's what's driving this global economy growth back up is the tech sector. But the two factors, you know, the resources and the banks. Okay, well, the banks, now we're in a low interest rate environment, and likely to be in a lower interest environment. As we had spoken before, the Bank of Canada announced that they would keep their rate at a quarter basis point, and it's likely they won't increase to, what did you say, to
2022, it looks like,
potentially. Okay, so a low rate environment for banks, so they can't make money. So then there's an issue there. And now, as we're starting to kind of reopen the economy, and we will continue to see closures and businesses not reopening, and so then there will be unemployment. There is likely to be loan losses for the banks as well, right? Sort of moving forward. So Canada is going to have, you know, a difficult time in kind of getting back into sort of the positive, as it would be, and they're going to have a challenge in paying off this debt. But do we really have to worry about the debt today?
No. I don't think we do. I think it's,
I don't know,
it's
a lot of
something...
people do. Like, a lot of people are really worried about the debt for tomorrow. Where I think today we have to worry about reopening.
Yeah, I think you're right. I think today it's not about worrying about that deficit. That's a problem for next year, the year after that, and the future years and decades to come. But I think, to your point, Joe, with like, what do we have in Canada? I just saw an article with BNN stating that the Business Development Canada, they're coming out trying to support companies with intellectual property in Canada. So they're really pushing for innovation within Canada. Businesses coming out with IP where they can protect that and invest in that in Canada, because I think they are seeing that we need to innovate and evolve across different industries domestically, because we need those industries to be able to thrive when things come crashing down, or the industries change, right? The world's changing. We're moving away from maybe oil right, and looking for more renewable sources of energy. And so yeah, there's lots of things to look at, but I think that's important, that the government is seeing that they need to start investing in intellectual property and new innovative ideas for businesses in Canada.
Yeah, another industry I've seen them moving sort of, not necessarily away from, but not highlighting as much as manufacturing. There's a big manufacturing sector here in Southern Ontario. And every once in a while you see the politicians out trying to plug for more manufacturers, but I have seen less of that in the last few years.
Yeah.
Mhm.
So I think that's a good overview of Canada right now. I think we should just touch a little bit on current status, as there was news that Ontario is entering stage 3 of reopening as of Friday, so tomorrow.
Yeah,
So
most
that,
of us.
well, so most of us, yeah, that's a good point. So most of Ontario, there are a few GTA, Windsor area that are being, were held back. They were held back for stage 2 reopening. So they'll be held back, it looks like, for stage 3. But that is pretty much most of the economy reopening. And, you can't eat at all you can eat buffets yet. You can't go to amusement parks, concerts, sporting events, anything like that. But a lot of other businesses like movie theaters, indoor restaurants, those are going to be able to reopen. So what is that going to look like come Friday and come the following weeks? How is the economy going to look when it comes to stage 3?
Yeah, I don't know. I actually did hear that sporting events will be open with social distancing. I'm not quite sure how they're going to manage to do that. I mean, it'll be interesting to see how people react. I mean, we've put so much sacrifice in our daily lives to stop the spread of this virus. And it'll be interesting to see if people can hold themselves back from enjoying those things they miss in order to continue that endeavor.
Yeah, I think you're going to have, like, a group of people that are just going to be rushing out to get into their favorite restaurant, to sit inside and whatnot. And then you're going to have a lot of people that are still going to be very cautious about that, and maybe continue doing the takeout or sitting out on the patio and whatnot, not to be in crowds. Canadians, I think everybody sort of understands Canadians compared to Americans, and we see what's happening down in the US. I think we're much more cautious about it. There's a few high flyers. I was hearing on the news early this morning of a situation at I think at a No Frills or something near Toronto. So you get people that don't want to wear the masks, and that might be a bit of a challenge. But I think for most part, Canadians are willing to stay the course. I personally think it's a great idea. I think the way that Premier Ford has brought out and kind of opened up sort of the economy systematically and cautiously, to me it makes sense. Now I may not be saying that if I was a hairdresser, right? So I may be very upset of the way he handled things, but as he continues to say, which I totally agree, it's not necessary. Yes, I want to get the economy going. I want to get businesses back running, but at the same time, I want to keep everybody safe. And, we're seeing that in the States where they're having to shut down again.
Yeah, I think that's an important comparison is you look at, we saw pictures on the news, and we're all here in stage 2 where we're not allowed to really go indoors. We're all wearing masks, and you see some of the craziness, especially down in the South in Florida, and they're hitting 15,000 cases a day. And it's astonishing to see kind of that happening. And you're kind of looking at it like, oh, we don't want to turn into what that is. We don't want to hit those numbers. We don't want to run into that situation. So I think you're right. I think it's been a good gradual reopening. And I think even though we're entering phase 3, a lot of the restrictions when it comes to masks on transportation, masks on indoors, unless you're eating, wearing a mask, and that's going to be the situation, I think, for a little while, until we can get a hold of containment and eventually vaccine for it, which there has been news around lately that trials are going well for the vaccines. Moderna specifically, one of the vaccine who are working on one of the vaccines, their stock recently went up significantly. They had a 30-person trial where antibodies were found in every single person. So there were some side effects, and it obviously was a small sample size, but it looks like they're going to be opening it up to about 30,000 person trial starting this month. So that's good news to see on that front. And it's, you know, hopeful that once we move into those next stages of these vaccine trials, that they're able to succeed in the manner that they've succeeded in the earlier phases. But I think that's created a lot of optimism, not only for people saying, okay, what we're doing is working, and the medical professionals are working on a vaccine so that we can get back to as much of a normal as possible. And then also that's creating some confidence in the markets at the exact same time.
Yeah.
Mm-hmm.
Yeah.
You have to have the big picture with this, where, yeah, the sacrifices now, but this will better our economy and our lives.
Mm-hmm. Yeah, and a big shout out to Canada. You know, in Quebec, there's a Quebec-based company that has gone to human trials of their vaccine. I think out there, out east, there's another company as well. So kudos to the Canadian companies that are in the running here to get that vaccine to market. And I think the big concern with the vaccine is whether or not the virus is changing, it's adapting. Right. And currently, based on sort of what I've heard in some news reports, is it hasn't been changing. So the virus has been staying constant. So it hasn't been changing. So then that means that the vaccine that they're currently producing will work for that particular virus, and it won't sort of genetically be modified. I think the concern in come fall time is whether or not the coronavirus will actually, do something with our regular flu virus that kind of moves around and kind of morph into something. So that, I think, is the concern. But back to sort of opening and closing, like how terrible would you feel at this point in time, like in Canada or in Ontario, if we had to close again?
Yeah.
Like, I think that's, and I think that's the feelings that they're getting down in the US. They just opened up and now they have to close back again. I think from a business point of view, it's terrible. I think from an emotional, a stressful point of view, I think it's really, really hard on the individual business and the businesses at large, because you're in sort of no man's land. Essentially, you don't know which way, what to do. So I think that would be a very stressful situation. So I'm kind of encouraged of the way things are going now here in Ontario, and very hopeful that we'll hit potentially the stage 4 at some point in time.
Yeah, and I think even with pressures from industries and businesses, like you look at the travel industry, you've pretty much got Air Canada and the airlines begging the government to allow for more flights, allow for that. But I think them being strict on the borders, right, closing down the borders. I saw something that said 5,000 Americans tried to cross the Canadian borders in the last couple of weeks to do shopping, to travel, to get out. And, we're denied access, right, with the borders being shut down. And I think it's just, that cautiousness. And as you said, Joe, applauding Canada for what they've done in Ontario and all the provinces, because this has been tough, because, you're hurting your own domestic industries with Air Canada and those businesses that are really struggling and are going to take a long time to rebound as well. They'll probably take 3-4 years before they can get back to having every seat filled on an airplane, right? Or things like that. So, aside from those pressures, the government is still standing strong, saying that we've got to look at the long-term picture, and have really, really taken a slower pace to this, which has benefited all of us. Because as you said, if we have to close down again, that is an added stress to everyone. Again, more layoffs, different, they're having to add more funds to the economy, right? More support systems, more emergency benefits, right? So that would just kind of add to another new snowball effect, which we want to avoid.
Yeah, and we're hearing about the layoffs. At Pearson, 500 people laid off. WestJet, a few weeks ago announced their layoffs as well. I think inevitably that was going to happen. We knew that was sort of going to happen, and in light of the fact that our borders will continue to be closed for a little bit, we don't know how much longer. But it's an interesting balancing act that the government has to do. Yeah, on the one side, they want to reopen the economy in order to get dollars running, in order to pay down this debt of all this money that they've come up with, that they've created.
Mhm.
And then on the other hand, they have to keep people safe as
Yeah.
well, and avoid sort of a second shutdown. So it is a balancing act that that they have to go through.
For sure. I think one of the markets that has done well, or the industry, is the housing market. Amongst everything, it's kind of powered through it. It has seen a bit of a freeze back in March, April, but again, we're seeing numbers that are growing in June with regards to the housing market. So it is still something that's roaring strong amidst everything, which is, somewhat can be surprising, but at the same time, uh, where are these buyers coming from, right? That's the thing. I think the low rate environment is driving a lot of people to buy right now as well. But it's interesting to see that the housing market is being so strong.
Oh yeah, it's that the low interest environment, and now potentially that low interest environment, until 2022. Why
Yeah.
wouldn't you want to buy a house? Why wouldn't you want to buy a property? And then it comes down to the supply and demand, because ultimately the supply was limited before we got into the COVID
Yeah.
situation, and demand was high. Um, so, moving forward with a continued low interest rate environment, it just, sparks people to say, okay, well, now's the time to do it, and get into sort of real estate, or move up, or, into a larger house at this stage of the game. And if you can financially do it, why not?
Mhm.
Right? Like
Yeah.
if you've got some stability with your job, why wouldn't you sort of make that trade and kind of move up, in real estate? But I guess the question is at what point in time will that demand kind of subside? Because in previously we've talked about sort of where the demand's coming from. A lot of it's coming from immigration, right?
Mhm.
And so immigration is, we're shut, we're closed, right?
Mhm.
We're not
Yeah.
having any immigration, right? And so the question is, when did that immigration start opening up? I guess at the same time that the borders start opening up, I think we'll continue to, welcome immigrants into Canada, and that demand will continue.
Yeah. I think the big thing too is the real estate markets had to shift. Like there's no more open houses, nothing. So even seeing a home, right? I think people are almost more eager because they haven't had the chance to walk in. They're like, everyone's looking at the same pictures I'm looking at. I need to get in. So I think that's added a whole new twist to the market. And you look at that with every industry, right? This has caused industries to pivot, and that's one of them that I think has still continued to see that demand. And even though you can't go and walk through a house, on a Sunday and just browse around on all the open houses, you have to have short scheduled, walkthroughs. It's creating a lot more buzz in those situations.
Yeah, and although there are some companies like WestJet, for instance, that are laying people off, there are other companies that are gearing up to get opened again.
Mm-hmm.
So this probably got to be a reassurance for some of the market that they've got the money and the funds to go ahead and make that purchase they've been waiting to
Yeah,
purchase.
and we have seen a lot more jobs being added to the market. A lot more are being part-time jobs. So I think some companies are hesitant to hire full-time again, knowing that if there's a second wave, if we have to shut down again, they might be hesitant to add those full-time positions back right now. But it is good news to see that jobs are being created. Whether they're part-time or full-time, they are being created in this environment right now as we reopen. And hopefully once we enter stage 3, that opens the door for a lot more opportunities for people to get back to work.
Mm-hmm.
So I think moving forward to kind of conclude the podcast, I think we should look at just the markets in general. And what are we seeing? What's the outlook looking like for the markets as we head into the end of July into August here? I know when it comes to the U.S., with every podcast we do, we get closer to the U.S. election. So there's always news surrounding that kind of going on and impacting it. But I think overall, the markets have had some steady growth week over week. And we've seen them retest some highs because we did have a bit of pullback in June, but they've retested the June highs and look to be surpassing those. So let's kind of discuss a bit what the market outlook looks like.
Yeah, I think we're still in a bit of a trading range,
Mhm.
and so we haven't quite broken through sort of that range in order to kind of substantiate that we're actually moving in one direction or another. I think as we continue to grow, I think the chances of significant pullback is less and less. One analyst that we've been listening to has indicated that we're probably in the early beginnings of a new bull market.
Mhm.
And it's going to be rough, it's going to be tough, it's not going to be easy, and we're going to bounce around for a bit, but essentially I think that's what we're heading into, is that bull market. We've talked about this in the past, that that the market is forward looking and stuff, so it is sort of taking all this current information in stride, because it's already discounted that information, and it's looking forward to the reopenings.
Yeah.
So that being said, I think technology continues to kind of drive the market,
Yeah.
right? Primarily, it seems to be, the main driver. And the last, I think, few trading sessions, it's more been technology than the broader base sort of economies or groups of companies that we've seen earlier. So when we see the broader base, that to us means more sustainable, longer term growth.
Mhm.
Yeah.
When we see it's just one sector kind of pulling it, potentially you could have a lot more volatility.
Yeah. And I think the technology has been leading the way right now because it's the most sure sector. Like, we're still using technology given everything that's going on. Whereas all the other industries, there's too many questions about what's going to happen. Are we going to shut down again? Are they going to survive? So I think that's why we're seeing the tech sector shoot above the rest right now.
Mm-hmm.
I think you can also lump into the tech sector as the ones that are succeeding is the companies that have been successful in working from home. Those that, we've seen, last quarter earnings start to come out, and companies that have succeeded in the work from home model, those companies are seeing a lot of growth because they're seen as being flexible. They can be working at the office, be working from home, have a hybrid model in place, and still be successful in whatever they're doing. So I think those companies, obviously leveraging tech, probably have some sort of connection to the tech industry, but those companies as well, we're seeing a lot of growth from, and they are the ones pulling the market across. But I think, as you said, Joe, overall, I think it could be rough and tough over the next few months through the rest of the year, but I think we could be entering the start of a bull market. So lots to keep our eye on as we move forward. But I think that's a great place to end this episode of the podcast. We'll be back in August, at the end of August, with another episode, and then we'll be back in the fall after that with our bi-weekly schedule, wrapping up in December this season. So make sure to stay tuned for that. We have been releasing a bunch more videos on our YouTube channel, so make sure to go check those out. And we have recently started a socially responsible investment series on the YouTube channel as well. So check those out and let us know your thoughts in the comments below, and we will see you with the next episode. Thank you for listening. Please note that the opinions and ideas shared are from the viewpoint of KLT Wealth Management. They do not reflect the opinion or viewpoints of Investia Financial Services, Inc. or any other partners. The commentary provided is for general information purposes only and does not constitute accounting, legal, tax, or other professional advice. You should not act upon the content or information discussed here without first seeking the appropriate personalized advice from an accountant, financial planner, lawyer, or other professional. We try to provide content that is true and accurate as of the date of recording. However, we give no assurance or warranty regarding the accuracy, timeliness, or applicability of any of the contents. We assume no responsibility for information consumed through this podcast and disclaim all liability in respect of such information, including but not limited to any liability for errors, inaccuracies, omissions, or misleading or defamatory statements. Mutual funds and/or approved exempt market products are offered through Investia Financial Services, Inc. Insurance products are provided through multiple insurance carriers, and/or approved exempt market products are offered through Investia Financial Services, Inc.